With shipping traffic through the Strait of Hormuz now brought to a standstill, concerns are mounting over the impact on global trade, particularly in key commodities like fertilizers. So, what does this mean for supply flows, pricing, and ultimately for farmers? Joining me now to unpack the implications is Josh Linville, VP of Fertilizer at StoneX. Welcome, Josh.
Hi, I hope you had a quieter weekend than what I had.
I know. Well, it's been ups and downs, more downs than ups, I should say. So let's start with the immediate impact. How are the latest, or what are the latest developments in the strait, and how are they actually affecting fertilizer flows right now, particularly for nitrogen and phosphate exports that normally move through the Gulf? Are you already seeing delays or disruptions in supply?
Well, we haven't heard specifically, but you have to assume that is the case. When you look and see how the situation has gone on, the U.S. and Israel carried out strikes in Iran, and as to be expected, Iran has carried out retaliatory strikes. And now all of a sudden, traffic through that Strait of Hormuz has started to grind to a halt because vessel owners are saying, exactly as we said, we're not going to put our ships in harm's way. We're not going to put our crews into harm's way. We are going to wait this out and see what happens. Well, the unfortunate part is that means that all of a sudden you have locked in 3 of your top 10 global urea exporters, 3 of your top 10 global anhydrous exporters, and the phosphate market, with 5 countries control 85, 90% of that export flow. Saudi Arabia's back there. And now all of a sudden they can't get to the world. And the phosphate market's already suffering because we don't have China, the world's largest, historically speaking, exporting either. This has made a very bad situation and probably about the worst time of the year on the calendar that you could possibly have.
Talk to me about prices. Where are they this morning?
So everything is still shaking out. The early indications we've had so far, all we've seen is NOLA urea pricing out there from a physical standpoint. And based on what we had seen last week, prices are up about $70 a ton. They are now residing in the mid 550s. They had been around 468, 470 when we closed the markets on Friday. So we're up substantially.
Okay. We actually have no idea whether this is going to be something that drags on or, it could be over in 2 days. But what does that mean for how supply is managed? Are there alternative routes or sourcing options? Or does a prolonged disruption start to tighten the market quite quickly?
I think it's quite quickly. When you look around the world, and this is a problem we've been talking about for months, if not years, the global nitrogen marketplace, and frankly, the global phosphate marketplace, its production levels has failed to keep up with demand levels rising. And so we've gotten to the point where we don't have any excess production around the world. We don't have these excess supplies anymore. We had already had, take urea, for example, outside of the Middle East, we had already had situations where China wasn't exporting until August this year, where they're a top 5 player. Europe still producing at 75% operating rates. Well, they're still suffering. You tack in all the production repair turnarounds that we've had throughout this fertilizer year and things like that. We just don't have the excess production. And for those participants that, you take like a Saudi Arabia and Iran, well, now all of a sudden they don't have a way of getting through there. And that's why we always talk about the Strait of Hormuz is so very, very important. For those manufacturers that relied on the Persian Gulf to get out to the rest of the world, if you shut down that narrow body of water, you're stuck.
Yeah. And then on the cost side, Josh, obviously oil prices and shipping insurance have risen a lot. How quickly do those higher energy and freight costs feed through into fertilizer pricing and ultimately to farmers and in the end to us, the consumer?
Well, you go ask any farmer out there, and I don't care if it's in the US market, the Canadian market, in the global market, they're gonna tell you, boy, it sure seems like anytime there is something that pushes price ideas lower, I'm the last to know, I'm the last to see it, but man, if the price goes up, it's immediate, and that's exactly what I think you're gonna see. I think you're gonna see a lot of the offers that were out there on Friday are no longer gonna be there today. I think the market is basically gonna shut down and say, until we have a better idea of what this means, and to your point, is this a 2 or 3 day conflict, or is this a 2, 3 week, or a 2 to 3 month? We don't know how this is gonna play out. I wanna continue to believe this is gonna be less than a week. We're gonna have this thing situated fairly quickly, but I don't know that for sure. And all the buyers and all the sellers in the marketplace don't know that for sure either. So until we know that kind of information, everybody's going to kind of scale back and say, if I can go find your product, if I can go find resupply, we can talk. But if I can't find that, which is going to be very difficult to do today, especially this morning, I'm just going to wait.
Josh, thank you so much. I'll be checking in with you throughout the week for any updates. And thank you so much to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.